By the end of this week, the total government debt in Uganda would have crossed the 110 trillion. Now that's a new number. It's a new level. It's a new all-time high. It gets interesting when you notice that this year alone, in the financial year 2024-2025, the government is about to borrow close to 24 trillion from the domestic market. It gets more interesting when you notice that when you are to read the budget, the current budget for 2025-2026, the government is almost allocating 11 trillion plus to interest payment. It gets more interesting when you are to pay attention to that number and you notice that the government, that 11 trillion is almost 30% of what URA is projected to collect. All of those numbers, when you look them, all of them in tandem, you start to worry as a Ugandan and say, okay, are our debt levels reaching levels that we should start to pay attention a little bit more? Yes. 110 trillion debt. This is both domestic and external. It's interesting because the external has not so much moved. The external debt has almost significantly been the same for the last 2.5 years. But the domestic debt in 2023, towards the end of 2023, it was close to 30 trillion. 2.5 years later, we are almost crossing to 60 trillion. And when you look at the interest payments the government is about to dedicate to the domestic borrowing is close to 10 trillion plus. The debt servicing cost is about to almost cross 10 trillion for just the domestic debt. Yes. And I know at this point, many people are going to ask, but Alex, you are promoting treasury bonds. Yes, I'm going to continue promoting treasury bonds. They are a capital product, a capital markets product. The risk, the skyrocketing treasury, domestic debt, or even both domestic government debt, domestic and foreign, it's leading to a skyrocketing interest rates we are seeing in the market. In the last auction this month, we saw a 17.945%. With an anticipation, this week's private auction might bring in, the private placement might bring in an 18% plus in maybe the 20-year bond. The government is about to borrow close to 2 trillion in 1 week in the private placement. Now, this is a lot of money, especially when you have to pay attention to the fact that we have less than 40 days, 35 days to the end of the financial year, and then we start another new financial year for which the budget is over 66 trillion, and of which 20 trillion of that budget is going to debt servicing. When you have to think about it that way, that almost 30% of our budget now is going to both domestic and external debt, with just when you pay attention to the interest expense alone, it's almost 30% of what URA is collecting, then you start to worry. And it seems there is no any chance for the government to slow down. As a Ugandan, that starts to worry you. Because this is it has a ripple effect. A ripple effect that I assure you the treasury bond holders will be paid first before salaries are paid to the civil servants. Treasury bond holders will be paid first before they care about which business is paying which taxes. Yet this is not a time to celebrate just because I'm invested in treasury bonds. The real economy will start to get stifled because the cost of running the government is becoming more and more expensive. The banks that should be the precursor to a real economic growth, investments in the real economy, have also decided to significantly lend to the government. Oh yes. The commercial banks, when you are to see the trend in the last 10 years, there is a big shift in where the commercial banks are lending. They are lending to the government as compared to lending to the private sector. And you do not want to blame them because the private sector comes with a higher risk, while the government comes with a very low risk and higher return. If they can secure a 16.5% return on a 3-year bond, like we saw in the recent auction, why should they lend to a private person like Kakande? They are there to do business. Their fiduciary duty is first to their shareholders, and to the shareholders is profit maximization. No wonder that's why you see government is stepping up to subsidize certain loans to critical sectors like agriculture, industrialization. When you see certain banks, what they are doing. But that is not sustainable. The government can't be the biggest lender and borrower at the same time to the economy. Especially when you look at that for service providers to the government entities and the MDAs have a growing debt to them. Liabilities, payables. Some have not been paid for close to 3 years. So when you look at that cyclical nature, that the government debt is increasing, it's forcing the yields to go up, at the same time forcing interest payments to go up. When interest payments go up, it means the government is using so much debt, so much revenue to pay off interest payments. That means they have to now to collect more. When they collect more, they have to come for the businesses. More tax, more pain for Ugandans. It's not business as usual. It's not a business as usual. I know I'm going to be roasted for this, but